Okay, good morning. About to share my screen now. Share screen. What screen is this? This one. So, yeah, there we go. Okay, cool. You guys should go see it. Okay, good morning. Now, from the macro standpoint, not really much has changed since just last night's plan. And for those of you that missed it, the main crux of it was we're looking at three sectors with potential momentum that is at the end. One of them being financials, XLF, the second being materials, and then the third was, I want to say energy, was it? No, yeah, energy, right? I think it was energy. And three of these sectors are looking like they're slightly overstretched. If you look at, or rather, they're just losing momentum after being expanded. So as you can see here, basic materials all the way up here already in terms of momentum, and then you had financials also at the top, right? Oh, and healthcare. Sorry, it wasn't energy; it was healthcare. Energy is on its way down and has very little room to go down. There was healthcare, financials, and basic materials. Those were the three sectors that we were looking at for potential pullbacks. If financials get there, this would be a liquidity sweep. You're looking for a firm break, like below, I want to say, the 51.60 level, and then a retest of this level to further break down. So this is a really key pivot here. If you bounce off this level, then you're going further higher, right? So this will be the determining point. So that's very easy setup for financials. And then you can look up which are the top sectors in there that will actually give you that move. If you look at healthcare, you'll see that we got on the daily, you'll see a little bit of rejections that occurred at the 148-ish level. And here, your key pivot is going to be 145.50, as I was mentioning. So otherwise, you're ranging between these 2 points, right? And so a break above and a bounce above will give you more upside. A break below and then a rejection below will give you more downside. Really, really simple plans, okay? You don't need to overcomplicate this. Once again, look at the top weights to these sectors. And then finally was materials, right? And materials a bit more, it's a bit more non-defined here. But once again, it's kind of a box scenario, right? If you think about it, just put it in a box, right? Like that. And this one's going to give you, once again, upside downside scenario above this, breakout and bounce. Below this, break down and reject. So break out, pull back, bounce, or break down, pull back, reject, and then further down, okay? So you'll have multiple ways that this will play out. So that's the three sectors that I will pay attention to. We are currently expecting a Q2 pullback of some kind, a deeper pullback that will lead to maybe a 5%, 10% kind of correction. But as of right now, and Andrew's going to confirm this in just a little while, I believe, if I'm not wrong, we are in positive gamma. And because we're over that 6,000 and approaching that 6,100, which Andrew can then tell me later whether we are in positive gamma. But if we are indeed in positive gamma, then that might cause buying pressure to continue adding onto here. But I believe the algos, as Andrew was talking about, is signaling potential further downside temporarily, short term, right? 5-day kind of flow rather than like a longer term. So I wouldn't be surprised if we get that intraday flush to kind of create some liquidity here and then go for that upside move. That would be ideal. But on the daily here, if you look at this daily, right, that's a pretty strong candle so far. No wicks on the bottom, very barely any wick on the bottom. And then you have a top candle that's building here. So obviously we'll have to see how this closes, but you kind of get the idea here. If we continue to push up here and then break above 6,100, which I don't think dealers have incentives to do this, but if we do break above here, then that might cause a short squeeze, because then a lot of people would be squeezed out of their short positions, which everybody probably went short last week after seeing the third rejection, right? So that would be your upside scenario if you get some kind of a squeeze. Your downside scenario is more likely, and my preferred outcome for this week, obviously, would be is if we come back down here somewhere in the 59, 69, 59, 53 in this area, right, where we saw previous support come in, or even all the way down into 59.20 to 59.40. That would be ideal. Push back down, create more liquidity, even maybe force this down a little bit more, create more space, and then the rebound, right? So that would be, you would use very key pivots here. That would be my technical setup for the week. Now, as I spoke last week about this, and Andrew also, have the same sentiment, that technology has been taking a back seat in this market for a little while. And we are really, really excited to see technology come back into the front seat. So we are kind of watching for NASDAQ to be a bit more stronger than the S&P 500, which it was on the last round that it came down. You can see the two previous times it came into this demand zone, right? And if you compare that to SPX, the two previous times it dipped down all the way down, right? But the last previous point, NASDAQ, didn't come all the way down there. It just bounced slightly above here. So that shows the relative strength there. That might then lead to the NASDAQ leading the market instead of SPX. So that's what I am kind of focusing on right now, and I'm hoping to find a few setups that will kind of, be in line with that. Now, BABA, this is one of the setups that we were talking about, a couple of weeks back, and we have been following this setup for a while. This is now up at 108. I took a bullish position on this not long ago and caught this huge wave up. And then I X'd out the position somewhere around here at 102, 103, around here. And then I didn't get into the pullback move, but this is now extending out into the golden pocket up here. Okay. Extension can go as far as the 61.8 at 114.20, which would be the then area that I would be looking for a pullback. All right. So if it gets all the way up to 114, then this is the area where I would be comfortable with potentially, not having so much risk on the table with this. But remember, as I mentioned during yesterday's session, you don't need to pick individual stocks because there are ETFs such as KWEB, right? For example, KWEB, right? Which we have been following for a long time, right? Which is also looking like a reversal out of this downtrend, right? And if you look at the HSI, Hang Seng Index, you can see this clear as day. Today was another very, very strong momentum move, right? So looking at this on the weekly, you can see very clearly that we broke out of the downtrend that we were once rejecting, right? We broke out of it here, and then we pulled back, right? This was the big stimulus unleash, pull back, bounce, and now we're heading back up here. The first level to test and break would be 22,550, and then you'll have all of this golden pocket up here, and then the 61.8 extension, which will then set up a much bigger move to the upside, all right? So China is one of the markets in which I'm looking at for potential bullish price action, which is for continuation. Now, covering just US 10-year yields, which has recently broke down from this kind of uptrend that it was in, but it needs to still, remember, so you have lower high, and higher high, right? So you need this, in order for this to reverse downward like this, right? You will need a higher low, right? Lower high here, and then you'll need another wave down to complete this move. So there's still lots of room here for the bond market to switch up and change. And so we still need more developments here in terms of where price action is going to head to in the next couple of weeks. But my view is that we are moving away from an environment where the short-term price action was, the short-term bonds were snapped up, and now people are taking more risk in the long-term bonds, okay, which is your longer duration bonds. So the credit risk environment is changing a little bit. And you know what, I'm going to write a little blurb about that so I can explain it better. For the dollar index, obviously take this pennant expression as a full entertainment purpose. This does not mean in any way that the price is going to squeeze like this. But you know, it's for me, I have a habit. Whenever I see 2 points converging like that and 2 points converging like that, I tend to draw a pennant because it's just the easiest way to understand how price action will start to squeeze, right? And so for this specifically, your main key pivot will be down here at 107.22, and then you'll have a upside pivot which is at around 109.50, let's just call it, right? So as long as the dollar stays between here, the SPX and NASDAQ will also kind of be buoyed, and it will stay in the same region, okay? Now, individual stocks. One thing that I wanted to cover that I didn't cover in last night's sessions before I hand it over to, you know, Andrew for today's pre-market session is Tesla. And this is perfect because we spoke about this last week, and me and Andrew gave you guys our thoughts on this, that Tesla's likely going to drop a bit further, right? Because it needs to create some liquidity. It needs to engineer some liquidity. And so this is your previous high, right? Which now you likely turn support. But then if we don't get a bounce here, what's going to happen is it's going to come down and squeeze more of the long players who then take the risk here. And it will likely come even further down into the either 320 to 340 or even further down into the 300. Okay, it'll squeeze all these people out, create that liquidity, and then you will get the rebound on Tesla. Okay, so watch out for that because that will happen at some point either this week or next week. By the way, I believe next Monday is President's Day. I don't remember if President's Day is a holiday or not, but that's all I have for you guys in terms of the macro update and in terms of the main things that I wanted to cover for this. Let me stop sharing my screen now.
All right.
Is Monday a holiday? Does anybody know? President's Day? Is it considered a stock?
Entirely sure. One thing I want to add to that Tesla piece, right? And I always try to explain this to you guys because I think a lot of people lose sight of it, right? So let's say SPY is sitting here, right, at around 604. We know the algorithms are sitting down here around 592 to 591. So now ask yourself this question. If Tesla is here, don't mind my chart. If Tesla is here and SPY could potentially fall down $10, what's going to happen to Tesla? Is Tesla going to run when the market pulls back 100 points? Is Tesla going to consolidate when the market pulls back 100 points? Or is Tesla going to fall if the market pulls back 100 points? Right? So that's something to ask yourself when you're looking to get into a position, right? Is what is going to happen if the market does follow what the algorithms are showing, which is a potential break into the downside. Now, obviously, we know that 600 is the key level, right? Or 605, because we talked about it. But something to pay attention to when you're looking to take on risk is if that were to happen, then what would the stock do that I'm currently holding, right? Or that I'm planning to play, right? Those are things that you want to ask yourself when entering these positions, right? So keep that in mind, right? As you know, as you look at these things and you look to decide to take risk, as if the market were to do what the algorithms are showing, what would happen to the individual stocks that you're playing or that you're taking risk on, right? And then how do you protect yourself if that happens, right? So we saw the liquidity sweep on Tesla, positioned really nicely. Now we see it starting to come down. Very easy evaluation here. If this is a liquidity sweep, right? I always tell you guys, you can guess if it's a liquidity sweep, but make sure you hedge. You don't know if it's a liquidity sweep until it retakes the previous zone. Okay. So if, let's say this is the low, right, which it was, right? You had it there, it bounced there, it bounced there. Now you broke that low. The only way you can say that this is a liquidity sweep is if price starts to hold back over that low.
Yep.
Okay? So it's not a liquidity sweep until you reestablish this zone. Right now, it's a break of structure. And it could go lower as long as it stays below that previous low. If it retakes that previous low, then it is a liquidity sweep, right? So you can't just say, oh, it's a liquidity sweep because it broke the low. You need to see buyers now step in. You need to see aggressive buying kick in, push it back up, reestablish that low. Then you can say, oh, hey, this kind of looks like a liquidity sweep. Same situation here, right? If you just take this instant, right? You break this high, that's your liquidity sweep. You reestablish below that high, and then you get your sell-off, right? That's essentially your head and shoulders, right? For people that like patterns. So keep that in mind. Just because Tesla broke to the downside doesn't mean it's a liquidity sweep until it reestablishes that low. Then you can say, okay, I think this is a liquidity sweep. So with that being said, if I'm looking at this from a golden pocket standpoint, and I'm not saying that this is going to happen, but I like to position myself, this is technically how far Tesla can go down if shit were to get bad in the market and things were to go south, okay? So if you are buying here, you need to be aware that technically your golden pocket is down here for this wave, and your monthly move is down to 323. So for February, it can come all the way down to 323. That's your implied move. And your upside is 400. So now you can also see that I put these contracts expire. Dealers are long 400, 221. So dealers want the price at 400 by 221. So if we do bounce and it is a liquidity sweep, then I would expect price to go back to 400. So very important to note, if you're getting long Tesla, it better get back above that previous low. If it doesn't, then you could be getting long as it breaks further down, okay? So just keep that in mind. If we look at SPY and we go back to the data as to what is happening, it's in the playbook, right? If you go back to the playbook here and you look at this week's gamma levels, you can see that 605 is the biggest level, right here. So biggest level of exposure is 605. We're currently at 604. If we go back to net flow, tonight before we signed off, if you look at the last 5 days, although things got scary on Friday, bulls never stop buying. Right? I tell you guys this all the time. When you get an aggressive move in the market, go look at the net flow, go look at the algorithm. Those two things will give you insight. As you can see, they continued to buy as price fell. Not surprised that we gapped up this morning, right? So 605 is the potential target. If we go look at the key levels this week for SPY, the two main levels are 600 and 605, right? So if we go look at the key levels here, we can see that 600 is selling pressure. So if we break below 600, there's more downside. And 605 is buying pressure. So as T said, the market could squeeze higher. If we break 605, that could be a squeeze point where we see the market start to melt into the upside as dealers have to hedge above that 605 level, okay? So 605 is going to be a key area to pay attention to. If we reject 605, then there's a good chance we come back down into 600. And if we break 600, then there's a good chance that we get a move further down, okay? So right now, you're just kind of trading in between those two levels right here. So 605 right here with your 1 hour golden pocket right there. and then 600 right here. As you can see, dealers are long here. So clearly who's buying this? The dealers are buying this dip, right? And if we go back and look at environment, we can see that when their deltas go negative, right? When deltas drop, they buy. And when deltas decrease, they buy, right? So we can see in a negative delta environment, they are buyers. And we can see them buying off that 600 level, okay? So that is what we have to watch out for today. If price gets over 605, we could see the market start to get squeezed, therefore pushing us into the upside, therefore pushing us up towards that upside target of 610, 610.54 if you want to be exact. So not a bad start to the week so far. We'll see how things play out once the market opens, because again, pre-market doesn't really mean anything. We could sell off as soon as the market opens. We'll just have to wait and see. But also remember that a rejection in the golden pocket would possibly lead to a move to the downside, okay? So just because you're bouncing here doesn't mean that the algorithms are wrong. It just means that you have a bounce here. Now, you do have some data this week that you definitely want to pay attention to, like CPI. So if you guys haven't looked, obviously you have a lot of really big earnings here with stocks like Coinbase and DraftKings and Shopify and McDonald's this morning and Upstart, a lot of these growth stocks that can have massive moves. So just keep that in mind. Robinhood will be an interesting one, right? Datadog. So you got a lot of those really big growth names have earnings. But if you look here, you can see that you have CPI, which is going to be a big thing on Wednesday. So make sure at the close of business on Tuesday, you are positioned correctly to either hedge your position, or if you don't want to have risk on that CPI print on Wednesday morning, that you have managed your positions appropriately, okay? Wednesday is going to be a massive, massive thing to pay attention to. All right, as you can see, we're still pushing up towards 605 here. So with that, let's get into your guys' questions. BX. I would look for a back test of the high would be ideal. It's like this. Came right off the golden pocket back in 2022. So you technically have an extension up to 221. And you'd be looking for it to back test this zone here. So let's see. Nice order block there. Weekly. Nice break there. So I'd be looking for it to back test this area. And if you want to get in now, you can. You just need to be aware of that. Now, if it breaks that, then I would look for a deeper retrace. But that's kind of where it's at right now.
In the interest of keeping the recording short, I'm going to end the recording here. And
that's fine.
That's fine, right?
Mm-hmm.
All right.
Yeah, that's fine.